Hey everyone, welcome to JoJo Vents. My name is Joel Fernandez, and let's just get into it.
The third quarter Tesla top delivery estimates delivering 139,300 vehicles. That is a record quarterly delivery rate for Tesla. More importantly, for investors, the stock will likely react a little more favorably on this news, given the fact that the estimate was for 136,350. So again, Tesla topping Q3 delivery estimates. Guys, back to you.
Today we're going to talk about Tesla's Q3 delivery numbers and what that means for the entire market. So Tesla just announced 139,300 as their Q3 delivery numbers for the year, which is up by 54%, which is 97,000 over last year's released Q3 numbers, which is terrible for the traditional auto manufacturers such as GM, Chrysler, Fiat, which have shown actually on average a 7% decrease.
We're looking at that stock down about 5% this morning. Don't know if you think that is Tesla specific, if that's more broadly a result of where the markets look like they're going to open this morning.
I think it's more broadly. And look, we're not seeing much reaction on the delivery news typically, and Melissa knows this because we've had these deliveries in the afternoon sometimes.
Today, as of recording this video, Tesla is down by 6% and the market overall is down by around 5%. This has nothing to do with the numbers that Tesla just announced, and it is more likely the reaction of the news that President Trump and First Lady Melania have tested positive for COVID-19. Tesla's numbers and the growth that we've seen is just another nail in the coffin for the traditional auto manufacturers. Tesla is slowly gaining market share while their competitors, the traditional auto manufacturers, are losing market share in this particular EV segment. As the numbers are evident, is a growing market share. The only way that I see personally for the other manufacturers to compete is to provide a product that is as comparable to what Tesla is providing. If not, they are not going to be able to match them on their technological advantage in the EV segment. Tesla has already shown their plans to reduce the costs even further, provide an even cheaper car, the $25,000 car that they announced that they're working on.
What does this mean for our future products? We're confident that long-term we can design and manufacture a compelling $25,000 electric vehicle.
What all this information is going to show is that Tesla is not done yet. There's a huge demand for EVs and Tesla is the only one providing it right now. Any of the other traditional auto manufacturers will have to step up their game significantly to even come close to achieving what Tesla has done. Their technology and all the information that they announced during the battery investor day is showing us that Tesla is buckling down and they're going to be going full speed ahead with their innovation. And the $25,000 car that they announced on Battery Day will be the definitive nail in the coffin for most of the traditional auto manufacturers who are still trying and struggling to get into the EV market. The $25,000 entry point is for a lot of consumers, including myself, very attractive to get into a market that is seen more as a luxury or a premium at this time. All the other auto manufacturers will have to step up their game to even come close, which would mean that they have to provide a comparable car to Tesla while having significant losses on their side. This is not possible in my opinion with how they are currently structured, because the investors for those companies are looking for dividends. And while Tesla is a growing company, so they can take the risk, they can afford to take the risks, which they are doing so in their stride, and they're continuing to push the envelope forward. Everyone who's invested in general in Tesla is looking for that. Personally, I've invested in Tesla, so it is a little bit of a disclaimer. It is slightly biased, but what's happening here is that the people investing in Tesla, all the independent investors, they are not looking to what they currently have, but what they will have in the future. The investors in GM, in Ford, and all these other traditional auto manufacturers, they've had an amazing run. However, they've remained stagnant because they need to cater to their shareholders who are looking for consistency. However, consistency does not mean that they will be able to overcome innovation in a field where they've succeeded. What Tesla is doing today is very similar to what Toyota, Nissan did to GM and Ford when they entered the American market. at that time, GM and Ford did not take them seriously, and they suffered because of it. And they've had to change and restructure accordingly. The only way these companies are going to survive, in my opinion, is that they are stubborn. They will not want to change. But what they will have to do if they want to keep afloat is they will have to downsize significantly. They'll have to restructure. They'll have to change what they are promising to investors if they want to have a shred of hope. Well, that's it for me for today on this particular topic. But stay tuned. I have a lot more things planned. This was very awkward to start filming, but it was a lot of fun. I'm glad I was able to do it. Thank you.
During Fast Money, you'll see a bit of a pop when they exceed delivery estimates, but we're not seeing much of a reaction here.
We also had Elon Musk back at the end of September 21st, I think, or thereabouts, Phil, in an internal memo saying that there's a good chance of hitting a historically high level deliveries for Q3. And then we had the shareholder meeting the other day along with Battery Day, and he also sort of stood by guidance. So this is not entirely a surprise, and given the stock's week to date 10% run up, maybe a 5% pullback in a day when the broader markets are lower isn't such a big move.
I agree with you, Melissa, and that's why I'm not surprised that we're not seeing huge